the briefing, the briefing for this morning, and very quiet session yesterday, very much as to be expected. The Whit Monday holiday, meaning that several major markets in Europe were closed, and many people just not in work, so volumes impeded due to that holiday, and a fairly quiet calendar. A couple of PMI readings in the service sector, but they were final readings, so nothing massively market moving. A little bit soft on some US data in the afternoon, and in terms of the close on Wall Street, was a little bit negative. S&P down just over 0.1, similar real margin for the Dow Jones, the Nasdaq, just very slight negative territory. So looking at the S&P, I guess more of a drift off what in longer time frames is a move from all-time highs seen just last week on Friday. So I think pretty natural to just see in a quiet market a bit of closing of these positions on these longs. Some of that momentum just dries up, and some profit taking on that quite substantial push higher that we had in the second half of last week, when we broke that previous all-time high level after a few tests that were seen early last week. One thing that does stick out this morning though is gold, and certainly gold continues to remain supported, irrespective of some of the kind of European political risk dissipating after the French situation, with Macron now quite safely in place as the president and seemingly doing a pretty good job in getting underway on the political kind of global scene. Certainly he seems to have come out quite well with his meetings with Donald Trump most recently. But irrespective of that, gold still remains pretty well supported. Obviously the last punch higher came when we had that pretty dismal non-farm payrolls report on Friday. We spiked up, we kind of held on to that gain, and we've just drifted up now, which brings us in sight to a fairly interesting level, which is around 12.95. This is looking at a daily continuation chart. What you can see here is a key area of volatility. You can see that big wick spike on the upside. That was that brief moment of gold spiking higher when it looked like Trump would win, only then for the broader play over the following kind of few months to be the Trump trade or Trumpflation, and so on and so forth. And actually this kind of projected economic boost that was going to come from his fiscal policies meant that gold came under some quite aggressive selling pressure at that point in time. Interest rates were expected then, the trajectory to be steepened in the US, that the Fed would have to respond to impending inflation, so gold came under pressure. However, as we know, that hasn't really materialized. If anything, there's been question marks over Trump and his ability to govern, and so gold's come back. And maybe a lot of this is a bit of supported by this idea of his future going forward. Interestingly, on Thursday, not only have you got the ECB in the UK election, you do get the FBI, or the former director of the FBI, James Comey, testifying to the Senate. Obviously, this could be pivotal if there's any credible evidence that comes to light of any wrongdoing from the administration. But upside, it's the April high, 12.95, that I'd be keeping an eye on. The fact that intraday we're already up about $9 on really not a lot of news. I would say another squeeze up of $6, making gains of around 15 bucks on the session, looks a bit toppy on a lack of real fundamentals, or at least new fundamentals that have occurred. So I'd probably anticipate that that would be a pretty big barrier technically on the upside. And then obviously you've got the psychological $1,300 level sitting just above there. Interestingly, at these levels then, we are back to pretty much where we were at the point of the US election volatility, back on that night of the 8th, 9th of November. So gold worth keeping an eye on as well. And then looking elsewhere, the euro has seen a little bit of pressure this morning, but there's nothing really from a fundamental news basis to really pin this latest little dip on. If you're kind of looking at the price action, obviously you had the dollar weakness more than really euro strength propelled euro dollar up on Friday. We then had a break of pivot, very quiet trading conditions yesterday. This is more technical, if anything. It then came close to S1, came back, and now we've had another little dip. So really, this is a market with a lack of emphasis, I would say, to really push in either direction. However, I'd say the upside is I kind of like the high from last week, protecting maybe some of the upside as resistance, given that we've got the ECB interest rate decision looming on Thursday. Possibly a lot of market participants, given the quiet calendar, will just want to play this range until we get that event on Thursday afternoon, press conference being key, of course. So on an intraday, probably I'm looking at that 112.94. If we get above R1 as the upside kind of areas that are key. Downside, obviously, you've got the low print that was seen yesterday afternoon, which is just around that S1. So playing this range could be interesting. The broader range being then the level that was pre the NFP spike. That also matching up quite closely with the S2 on the day. So with bigger things at play later in the week, let's just say those technical ranges could be the way forward, unless there's anything unexpected that comes out news perspective. Okay, quick update on some of the news that's come out, and this is one of the latest ones. Conservatives see poll lead narrow to 1 point, according to Survation. This was a poll Survation sponsored by ITV. One of the interesting things here, though, is that this particular poll, 41.5% for Conservatives compared to 40.4% for Labour, this was conducted over the phone. For those of you who've traded previous elections, you'll know that there is actually a little bit of a statistical variance between whether people are surveyed on their voting intentions via the phone or whether it's online. Typically, people on the phone tend not to be as honest about their actual voting intention, i.e., one of the things we were talking about in election preview yesterday, about if you were to vote for Trump, you were almost demonized as being uber right-wing. People very reluctant then to openly state that they were supportive of Trump, even though we know that turned out to be the case. Could also be something similar, certainly not to that greater extent, but you know, if you're certainly in London, which is heavily Labour, if you were to say you support Conservatives, it's almost blasphemy talking to a lot of people, certainly when it's so heavily tilted in one political direction en masse. So whether or not you're getting this idea that Nate Silver was talking about in his article yesterday about the shy Tory voter, which may not appear in the polling, that can be more evident in phone-based polls, which can give an artificial, would then calculate to artificially not being as supportive of Conservative and actually probably being a much narrower close call than what actually might be the case. The interesting thing here, of course, is that you had the ICM poll yesterday. That's still tracking at 11 percentage point gap. So you've got a range of 1 to 11. And if you thought that coming in this morning at a 1% gap, the most narrowest we've had, was going to create sterling selling, well, you've had the complete opposite. No one is really batting an eyelid at this point. I think the market's kind of desensitized a bit, as we've discussed several times, about the kind of divergence in the polling techniques. And for now, the poll of polls, or the averages, would still indicate a fairly comfortable 7 percentage point or so gap is more realistic at this point. So cable, not really seeing much movement. We're up actually positive at this present point in time. We're up about 25 pips. We had a brief look at R1 as Europe came in, bit of pickup in volume. So maybe just worth keeping an eye on a retest of that level at 129.51. Any move above there would obviously put us up at around weekly highs. R1 would then be interesting for R2 at 29.91, which is just short of that 130 level. And then anything above there obviously the multi-month high is coming in at 130.59, which is about a point or so away from current price action. I certainly don't think, I mean, the ability to get up to there is a possibility in the coming days. However, ability to break that, I'd say probably not, as people will be hanging back, I would say, waiting for the actual election now it is so close to taking place. Okay, one other thing from the news, quickly to have a quick recap on. I did send this out to you this morning. This was looking at Emmanuel Macron, the newly in place French president, and it's almost like the market's forgotten that we actually have legislative elections ongoing in the early part of June. It's actually just a couple of days away, and we go back to the two-round format of French voting for the composition of their National Assembly or their parliament. And actually, if anything now, this as to what Macron can actually achieve from his manifesto, if you like, of his party, is absolutely critical about what powers he has, is how well he can perform in these legislative elections coming up. So this has kind of gone a bit under the radar because of such a focus politically has turned to the UK, but June the 11th and June the 18th, first and second round, will be key. And what has happened here is because Macron actually, as I just briefly mentioned with his meeting with Trump, but overall on the global scene, and his comments about the Paris climate change, about ongoing global terrorism, he's done a pretty commanding and good job thus far as the public eye would be concerned. And the latest major Ipsos Mori poll that's been published actually shows that he's on course for a sizable majority. If you remember, when we were going into the actual presidency election, when it was a deal between is it going to be Macron or Le Pen, there was this big expectation that actually, irrespective of Macron winning, actually when it comes to his power in Parliament, he's not going to be able to get a majority. Well, that's completely turned, given his performance that he's put in over the last few weeks since his appointment. Why is it key? Well, this is a pretty simple graphic looking at the division of power, if you like. The president doesn't really hold the key one, which is really these two top points here on the right. Setting fiscal policy, which obviously in this current economic climate is key because of the almost exhaustion of monetary policy. It's this fiscal element which is absolutely critical at the moment in order to support the ongoing recovery in these European nations. And so having better control or a larger say means that he can push through and his policies that he wants. So setting fiscal policy, and then the ability to be able to pass that legislation. And then obviously as well, protection against any potential impeachment against him himself, if he's got more backing of his party overall in the National Assembly. So this is very much a big positive, I would say, in regards to sentiment, at least in the short term, because it eradicates, I guess, any degree of uncertainty in that respect. Okay, moving on. Other headline you should be aware of. The Australian dollar hasn't done a great deal in terms of sustaining any real direction overnight, but we did have the Reserve Bank of Australia keep its benchmark interest rate unchanged. That was completely, in terms of the interest rate, as expected by all 26 economists. They said that there's a mixed picture of weaker growth signals and stronger jobs market and a slowing of house prices. So when you look at those, even just those three particular areas of the economy, on balance then you would say as a central bank they're better off sitting on their hands, and that was very much expected. And so if looking at the Aussie this morning, there's not too much telling there in terms of movement in either direction. That's pretty much it though in terms of the actual overnight news, so I'm not going to continue this briefing for too much longer. Just going to let you guys get on with the session. But looking at the calendar, it's eerily familiar to yesterday in the fact that very quiet, and there's nothing really here that jumps out and screams the potential to create any type of intraday market volatility. The one thing that you do have the benefit of, obviously, Whit Monday is finished, so all European participants are back into the market. Stock exchanges are open as per usual, so volumes will be a little bit better. But I'd say in a day like today, maybe technicals become a little bit more important than usual, with there's a lack of fundamentals, and when the market is really waiting for the big event, which is coming later in the week. So looking at your individual assets that you're trading, identifying solid good ranges, and playing that accordingly, and then just listening out on the squawk for any unscheduled developments might be the way to kind of approach a day like today. If you're trading live funds, then obviously for the newer traders, this is all about really, in this type of environment, is capital preservation, waiting for better opportunities that may then come in the coming days, i.e. Thursday and Friday. Okay, gonna leave it at that. I've seen a few questions in the chat room, so I'll have a read of those, and after the briefing, we'll see if we can go through and answer a couple. Thanks very much. It's your briefing for this morning. Have a good session.